Are you tired of seeing millions of retirement products marketed to you? Things like annuities, life insurance, mutual funds, private equities, gold, CDs, you name it. And you're wondering which product is actually right. Well, in today's financial freedom video, I'm going to explain to you why retirement products alone will not make you financially free, but why only a smart financial plan built around your long term financial goals matters far more than any single product. So stay locked in. Hi, my name is Carson Graves, certified financial planner and president and CEO of the Retirement Education Center.
And my name is Andrea Graves, Director of Operations at the Retirement Education Center. For additional concepts on how to maximize your retirement, please subscribe to our YouTube channel and hit the notification bell to be notified when we upload new videos.
Now, before we jump into our lesson today, there are always two rules to retirement income that we like to give you. And Andrea, what are those two rules?
Well, rule number 1 is to never run out of money, and rule number 2 is to never forget rule number 1. And by the way, if you want to go deeper into these kinds of retirement topics, Carson covers them step by step in his first published book, How to Retire with Confidence: 5 of the most common pitfalls that could derail your retirement. You can get it today on Amazon by clicking in the link in the description below. So now let's dive into our topic today.
So let's go ahead and talk about why many retirement products will fail you in 2025 and beyond. One of the key points I want to make about this particular matter is that financial products are definitely ubiquitous. Everyone has one. Everything from annuities, CDs, life insurance, target date funds, mutual funds, private equities, you name it, they're out there. The problem with products is that many of the products that you're going to see are designed to be sold to you. And many of the products, they do have their limitations. Even though they may promise you guarantees or protection, they also come with a lot of fees. Some come with penalties. Some products will have poor growth potential and even company risk as well. So the company can actually go insolvent. So let's talk about the problem of buying a product. So let's consider this story here where you see Linda, who was sold an annuity because it promised her guaranteed income. And of course, that always sounds great. But here's the problem: Linda did not have much in her emergency savings. And a year later, she needed some cash for, let's just say, a home repair. But her money was locked up in the annuity. And in order to get money out of an annuity, depending on when you're going to extract those dollars, you may have to pay some pretty stiff surrender charges. So, with that being the case, the lesson here is that annuities are not bad by themselves. But if you don't pair the product, such as an annuity, with perhaps some liquidity for emergencies, they can end up backfiring on you. Retirement products fail when they're sold as a one size fit all solution. Let's look at point number 2: when someone maybe is an equity only investor. Let's take Mark for this case here. And Mark believed in stocks for the long run, of course, and therefore Mark had 100% of his portfolios in equity. But in 2022, Mark retired when the market actually dropped very sharply in that year. And since Mark was retired, he had to suddenly sell shares of his portfolio and ended up locking in permanent losses to cover his expenses. Now, in this particular case, if Mark had balanced his investments with some safer assets like bonds or maybe even a small annuity, he could have drawn on those assets during the downturn and let his stocks recover. So the lesson here is that you don't want to put all of your eggs in one basket. Diversification across safer assets and growth assets would be optimal for your survival in these times. So this brings me to my final point that I want to make for this video, and that's someone who's playing it too safe, like the CD saver. Now we'll take this story here for Susan, who basically just hated risk across the board, so she decided to put all of her money into CDs. And for years, Susan felt pretty safe, but while her CDs were paying anywhere between 2 to 4% interest, inflation on things that she would have to pay for in her retirement was increasing by an average of 6% per year. So therefore, her purchasing power was dropping all along. And so by the time that Susan hit her age of 75, The income simply could not keep up with the rising cost of things like healthcare. So the lesson here is that retirement products fail when they don't account for inflation risk as well. Playing it too safe can be just as dangerous as being too aggressive in this matter. So the moral of this video is that products alone will not make your retirement plan solid. Only a well thought out plan is going to do that, because a plan can actually evolve with your life, your goals, and the markets. Products can absolutely be part of a plan, but they definitely should not drive it. And we would love to hear from you. Let us know what's maybe one product that you relied on in retirement, and let us know how did that work out for you. Again, thank you for watching, and as always, be sure to speak to a certified financial planner in your area who can help you with these types of decisions.
After this video, please check out our other videos that will give you tips on how to maximize your retirement. And if you like this video, please give it a thumbs up, subscribe to our YouTube channel, and share it with a friend. Thanks for watching, and remember, if you have questions,
we have answers. Please note that these videos are created for educational purposes only, and that you should always seek out your own financial advisor, your own tax advisor, and your own attorney regarding your personal situation. Also, if you are looking for an independent fiduciary advisor to help you with these types of complex financial matters, we highly recommend that you utilize the links in our description below and go ahead and schedule a 1-hour free consultation with us today.